All right, Maximus Analysis here for August 3rd, 2015 at the close of 4 p.m. They came to the 80 area and reversed into the closed. We could see here on the 15, it went to the tick. 2080 is the low of this candle here, and they basically went sideways and popped up a little. What I'm looking for right now is on the daily is that if they stay below this 2094, 2099 area and break this low tomorrow, we will definitely see that as a week and see that this might be a potential pivot that we can look on. Right now, it's a very young pivot of basically a day. So if they continue to the downside, that's fine. And again, they break that 2080 area, which we've talked about numerous times. And if it stopped dead there, that means that it's something that, again, a lot of big names are holding. Okay. Still in this 50%, we see this blue triangle. We do not want to discount where we are. We're in the upper 50% of this range, and we got to say, as weird as it sounds, I have to say, okay, if they hold and break above, they could come up here, and I will not look at any longs until they get above 2120. Okay, right here, right now. Them reversing at that point means that if they test it and they keep continuing, again, we'll see what happens overnight. But again, they need to get above this 2094, 2092 area to 2099 area for them to look to any of the upside potential. I am not looking at longs as well. YM continued to break down. This is probably the worst one out of the bunch. Again, they held it a little bit today. The volume increased down, but they have to get above this basically the 17,900 area quickly, or it's going to break down. This is the 200-day moving average. I added it because a lot of people talk about it, and I was like, one moving average ain't going to hurt you. The reason why I don't like using the moving average is not because I'm averse to it, but I want people that watch this, I want them to look at the pure price action. Then if they apply the moving average on top of it, it would verify it. But this moving average shouldn't show you, or shouldn't be your deciding factor of if you were going to go long or go short. It shouldn't be the thing to say, okay, we're still looking good for all of this price action, just because if I put like the typical 5, 20, 10 or 50 or something like that, the moving average shouldn't let you got to be able to look at what the price action does. So this is the weakest out the bunch. The NQ is actually the best looking index out the bunch for now. Again, they regained a lot of this, but they need to get below this 4480 for it to look like. Again, this looks like a false breakout, but if they don't hold this level of around 4500, this is going to be deemed as a false breakout. Now we have some selling on some big down names, including Apple, which is selling into the close, breaking below that 200-day moving average. You also had IBM that they gave a huge sell signal for as well. Breaking down, and you also had your bonds pop up. So the bonds popping up is something to say, are they rolling out of the equities into the bonds for safety? You had we talked about the crude, and we could see that we have continued weakness on the crude. Again, it's 45.17 right now, and this again, I know I've been talking about this for a while, and I just, I'm not one person to rub people's things. What I want you to do is understand where the trend is. I don't give a shit about where you think it's going to stop. Where is the trend, and where, more importantly, where do you have to see it get above to say I am now looking at potentially an uptrend? Now, people might say, shit, I'm not going to wait till above 58. Again, why not? Why not wait above till it gets above 64? Before you think that it's going bullish. I don't want to miss all this move. Yeah, but you shorting all of these things is making you get destroyed. And also, I'm looking at this name, Twitter. Dude, why? Why is everybody trying to talk about Twitter so much? Again, this is a confirmed downtrend. Netflix looks good. Still looks good, even with this 1 day pullback. Again, we cannot discount a lot of things. LinkedIn does not look good. Falling badly after earnings and continuing. Again, dead cat bounce, but not something to go long into at all. Tesla, okay. Again, it's still holding these lows. And again, that's what you really have to make sure that you look at. It's still holding these lows. So, yeah, you have this price action, but overall it's holding up pretty well compared to everything. You have price line also reversed very nicely today. I thought it would be go down a little bit more, but they, you know, oops, let me see what I did wrong. You have this pivot that's still holding, so you can't just say, okay, the markets look down. You look for when the markets are going down to look for the weaker names. The downtrending names will be pushed down more, and kind of go from there. So you got the dollar. Dollar staying where it needs to be, still has some pivots that are holding, and once that dollar continues up, it'll still with gold. Gold continues down. I don't know why people still want to try to go pick where the bottom is for gold. It's still going down, dude. Again, it's very oversold. So again, a little pop up wouldn't be something that I would just be waiting for it to pop up, maybe to get some more downside potential, something to this, region right here. Even to come fill up that gap or something like that. But I'm not looking to go long that name whatsoever. So again, you look at this SPX, you could say, all right, it's not that bad. Again, this was just the index name for it, but it's not that bad going into things. And the reason why I don't like really looking at that too much is I need to see what the volume is. And again, the volume is increasing, but it's giving more of like a hammer formation right now. So again, they held at 2080, and I'm like, God, that's annoying, because I just want to break and flush this shit already. But the market's not going to do what you wanted to do when you wanted to do it. So again, you have to look and be prepared and continue. So again, we'll look and see how this one goes. But a lot of names are looking beat up on the Dow names. I think there was only probably like one name, which was Disney, that was actually up today. Everything else was beat down, and a lot of the big names look okay, but is it enough to hold up the indexes? And are they selling? Because remember, with these big names, they're able to control these, because a lot of people can't buy a Google. Okay, they can't buy this thing. I mean, again, there's the option, but they can whip these options around, the big guys, with thousands of puts and calls to just make the indexes look good. So we just want to make sure we're looking at the big picture. Okay, top ranked NQ. Okay, medium ranked ES, and the shittiest out of them is the YM, and that's why. So price action will let us know what's going on. YM would have a lot of grinding to do in a certain amount of time, but again, it continues under this holding this pivot and not getting above this one. It looks like more downside potential as well. So all right, take care, remember it's Monday, so we'll see what's going on tomorrow. I think we only have about one report, which is factory orders at 10 a.m. So we'll see what happens overnight and go from there. Take care.